Good evening, ladies and gentlemen. USA Trading Frank, and the last of the three video casts on the other proxies on the market that we track, that I track. So here's the SWING533 chart, which gives me a different perspective on what's happening more on the swing front rather than on the very short term. And just wanted to show this to all of my members. So first of all, we track the stochastics on this. Okay, when they start to turn, we're starting to see a semi-confirmed turn. It's not confirmed yet. These are confirmed, as you can tell. Everything in life is in 2020. In hindsight, everything is easy to see. When you see a confirmation, when you see a turn, that means the markets are going to go up for the next week or so. All right. Well, what we have to also follow in tandem with that is the RSI right there. Okay, so on the RSI side, when it gets up in that overbought level up here, at that point you want to minimize your long positions and start to look at hedges or short positions, right? And that's pretty much as simple as that. So at this point in time, we are on, these dotted lines are the pivots. And when you look at the pivots here, or the supports, you can see here that the pivot line here is at 2080, and S1 was 2025, right? That's where we are. And on the stochastic side, my apologies, on the stochastic side, we are starting to see a turn. Now, the S1 is around 2025, and that's pretty much what I've said was going to be a substantial bounce from that level. We're not there yet, right? So we have to keep that in mind. We are testing the red line here, the 50-day moving average. And as I've explained in the previous video cast, that should be a line of support and a possible bounce. Now, where does the possible bounce go? The possible bounce goes to the pivot. And if you want to see that more clearly, you can see that here. And that is at the pivot is that P line here, and that's around 2070, 2075. That's what I'm going for right now on the short-term tactical trade, which should translate into some very decent amount of money, and active and disciplined focused members and traders should act on it too. What happens after that, we shall see. If we break out, then we have R1 or resistance 1 over 2100. That's on the swing side, mind you. And then you have the mid. Then you have the mid Bollinger here at somewhere around 2080. Histograms are, if you squint your eyes a little bit and look stupid. Just kidding. Okay. You're going to see that the histograms are starting to go higher. The last histogram that we saw, which was Friday, was a smaller one than the previous line. So that's important, right? Now, whether or not this turns up is yet to be seen, but my gut tells me that if this cooperates and this crosses over the red line here, and this keeps on moving higher, then we should start to see these histograms minimize. Once they start to minimize, they generally go positive. That's the general pattern, okay? No guarantees, but that's the general pattern. And so if you're gonna stick with the trade, you're gonna stick with the S&P trade if you're playing the indices, and a couple of stocks that move with the S&P 500, and you see these histograms shrinking, they're getting smaller, then you obviously want to keep on going till they go positive. At that point, you sell. Now, whether they stay positive for how big positive it goes, like this, it happened right at the bottom. I don't think we're going to get this high a range, but who knows? But I'm just going to shoot for positive of like 2 or so, right there, 2 bars. And at that point, you bail. So sticking to the trade is fundamentally and profitably important for traders. And watching these histograms is extremely important. So that's number one. Number two, that's your S&P 500 picture for you, right? This is the consolidation channel, and bouncing off that, this line is still going higher. So it's all constructive for now. The key word is for now. Russell 2000, same story, okay? We got the turn here. Every time we have turned and crossed over, we have had a pretty powerful rally. All right? Even if it's for a couple of days or not, we have to see. Now on this one, we are seeing the histograms almost equal. We need the histograms to decrease. And once they start decreasing or getting shorter, we are going to go positive. When they go positive, we should let's say we go up to, if they go positive, then we are at 1060. Let's just put it this way. That's a lot. I'm sorry. If they go positive, we're at 1100 right now. My apologies, 1114. That means we get up to about 1135, possibly 1140. So you still got about 20 to 30 points that you can play. Watch this. We are in the middle of the RSI range, which is 50. 50 could be a rejection point or it could be a breakout point. We'll have to see. All right. All right. Let me just move on. NYMO, very important. McClennan oscillator. It's the real pressure of the underlying guts of the market on what's happening with the picture. This I like a lot. Stochastics, fast stochastics, very oversold. And it looks very likely, even if it slips a little bit, it's very likely that it's going to move higher, at least to the 50 range. The pivot is at minus 29.55. We're at minus 45.46. Let's call it 45. Every time we go to this level, so far, as happened back in March, we bounced. Getting down to 89, this is hands-on by the frigging dip of the market and hold your nose. I think we'll get that, but we probably might not get that right away. But when we do get that and we go to minus 80, minus 70, minus 90, you gotta buy the market. So this is short term, a pattern. You see the pattern? There you go. Upper end of the Bollinger is 58 plus 58. The 50-day moving average is around plus 25. Whichever the case, it looks like there's a possible double bottom here on the McClennan oscillators. Same thing you see with the RSI. Possible double bottom. So what I'm getting at, and if you're smart enough to understand this, I'm sure all of you are, we're on a short-term bottom. That's it. Short term. Can last for a couple of days, and I think that's it. NAMO, which is the NASDAQ McClennan oscillator. On this one, the same story, except I'm not seeing that turn yet. We need to see a turn. It's at minus 40, minus 80, big, huge buying opportunity, but minus 40 is good. Not great, but good for a bargain, quick bounce opportunity. All right. And this is the different indicator. This is the vortex. The red line is still moving up, so that's negative. But it's getting up there in that overbought level at around 35. We're looking at this is actually the MACD. This is slightly different internals I'm looking at. The MACD is still flowing down. So we'll see if it takes one more leg down or whether or not it starts to turn around. We'll see. Whichever the case, we're in a bottoming process. Short-term, tradable bottoming process. So I just want to show you guys all this. There are many ways to skin the cat. Terrible thing to say, actually, given the fact that we have 3 beautiful cats and 2 dogs. But the reality is that we'll see what happens. Apple being the biggest component of the NASDAQ 100. If that turns, then you are going to see one heck of a move. Individual stocks like Amazon, Google, acting strong. Tesla bouncing off the bottom. We made about 400% on that. On the lottos, or just on Friday alone. But those are individual plays. That's it for now. Thank you for listening.